Welcome to the Do You Ever Wonder podcast. Ever find yourself wondering about the world's biggest topics? Join your host, Mike Haltman, CEO, board chair, and all-around deep thinker, as he dives into real estate, investing, national security, self-improvement, dating, networking, finance, and so much more. Expert guests, real conversations, no limits. Hit subscribe and get ready for insights, surprises, and conversations that will make you think. The Do You Ever Wonder podcast starts now.
Hi, everyone. And one of the things I do wonder about sometimes is why my intro is so long. But forgetting about that, I'd like to start our podcast. I'm very excited today. We have somebody on who kind of revolutionized the way that people raise money. So, a long-standing thought in commercial real estate is that it's a relationship business. But if you're trying to build relationships with people who you've never met, how do you do that? So today's guest basically has the answer, formulated the answer. He's been in the industry for 40 years. He looks great. And he's transacted over $1.5 billion in property. He's got a Ph.D., which is extremely impressive in banking history and in risk mitigation. He actually cracked the code. You talk about codes out there that people crack, but how to move people from being a stranger to being a partner investor. And he did that through his know, like, trust, invest system. And he also created the Gower crowd, another way of raising awareness and raising money. Please welcome Dr. Adam Gower.
Thank you, Mike. What a kind intro. Just set me up.
But
only for disappointment.
You deserve it all. You deserve it all.
God.
And actually, my background is usually a grid of my Do You Ever Wonder podcast. But I'm so enamored with your know, like, trust, invest concept that I added that as my background. I use know, like, trust often in networking parlance, but no different in raising capital. So tell us a little bit about your background.
Well, first of all, thanks for having me on the show, Michael. It's nice to be here. So I don't normally admit to having 40 years of experience. It makes me sound far too old. I usually just say over 30 years, but I really did start in actually 1982, pulling wires for an electrician. And that's really how I started, kind of hands-on experience. But very quickly I got into, I was hired by a ground-up multifamily shop to help them raise capital. So this was in the 1980s, and I raised about 30 million. Primarily from Japanese investors, but I was very heavily involved in all aspects of development at that time. Then the savings and loan crisis hit. Go ahead.
The Japanese market is not always an easy one to penetrate. How did you get that kind of relationship?
Yeah, so I had a connection at the time who brought a Japanese connection. Who brought the investors. And then I started working with the investors. And I had an intuitive, this is a very long time ago. I was a very young fellow. I was in my, probably early 20s. So very young. But I had a natural aptitude. I realized I had a natural aptitude for presenting and explaining deals. And I could read between the lines when questions were asked that others didn't really understand or didn't really understand the nuance. At the time, I didn't speak Japanese, but I still understood what was behind the question that was being asked through the interpreters that we had at the time who were working with us. And I bonded very closely with one of the investors. And so really worked closely with him. My job was investor acquisition and conversion. And it was through him that I establish relationships and raise the capital. So when the savings and loan crisis hit, the end of the 80s, early 90s, uh, um, unfortunately, everything imploded. I lost all of my money. I thought I was a multimillionaire. I was on paper,
Right.
at a very early age, very young age, but it all evaporated. So this one, contact asked me to go to Japan. He said, "You're not going to make money now in the US. The market's collapsed, basically. So why don't you come to Japan?" So I figured, okay, why not? So I got on a plane and I flew to Japan, and he set me up with an apartment that was near where he lived with his family, and also with a bank account. So I needed guarantors. And when we walked out of the bank, he said to me, "All right, Adam," he said, "this is the last time I'll ever speak English to you, speaking English to you. Come back when you speak Japanese." So I signed up for some intensive Japanese study. And after 6 months, I had a basic daily ability. I basically immersed completely in Japanese. I didn't read, write, listen to, or speak English for 6 months. It was very, very intense. I look back on those days with nostalgic fondness, but the reality was that it was extremely, extremely difficult and very, very challenging for that 6 months. And then it took me about another year or so to acquire a business level fluency. And I was hired by a division of Universal Studios as president of Asia Pacific. One thing led to another. I started working on Japan market entry, and one of our clients actually ran this division. He got another job, and they hired me, basically. And so I ran a division of Universal. It was actually a JV of Universal and Paramount, and I did all their development work in Japan and exploratory work across Asia Pacific.
Say,
So that was during the
you
90s.
came in at a very high level.
Yeah, I did. Yeah. I was given a three. I didn't know it at the time, but I was given a 3 month. I was the only person there. The guy that I replaced left. He basically said, "I'm leaving on Friday," and so the studios had to scramble. And he recommended me. I flew out to
There you go.
LA, interviewed. They hired me, but it was in their minds it was a temporary 3 month thing until they could find somebody that had deep experience in Hollywood. But right, and then I was going to be replaced. I didn't know that. I only knew it afterwards.
But you did a great
And
job.
what happened though was that I did such an extraordinary job during those 3 months, and introduced some incredibly powerful people to the studios
Wow.
that they decided to keep me on.
So not to
Very
digress
highest level.
from real estate, but how did you meet those incredibly powerful people who you could introduce to the studio?
Yeah, so it was the same kind of process that I've always gone through, and is the know, like, and trust kind of flow, if you like.
Yep.
I My job was to find initially, and during that first period, that first 3 month period, was really twofold. One was to build a 5 year budget. So I only had one, I had a secretary. The guy I replaced had a secretary. He'd been there for years, hadn't really done anything. So I think in some regard, they were quite happy that he was leaving. And so what I did was I spent the first 3 months taking every single meeting. I don't, I used to, in those days we had business cards. It was a big deal. It was a whole ritual to how you handled business cards in Japanese meetings.
Thanks.
It was a whole thing.
Yep.
And I just took it upon myself to meet everybody. And the guy that I replaced didn't speak a word of English, Japanese, couldn't read Japanese. And so anybody whose business card was only in Japanese, he just threw it away. So he missed 90% of the key people. Well, I didn't, and I met them all. And so in addition to having to build a budget, I was also building a company. And my job was to find locations to develop across Japan. And so I proactively sought out people who had for want of a better term, really good deal flow. One of those contacts was a fellow called Den Fujita. So Den Fujita was famous in Japan. He was on the Forbes billionaire list. He was one of perhaps the wealthiest men in Japan. And he was famous for being the only person in the world who Ray Kroc at McDonald's had given an entire country license to, right? So I think Kroc didn't do that.
Right.
So, but in Japan, he gave it to Den Fujita. And Den was opening, or Fujita was opening 5 new sites every week. It was incredible growth. So I thought, well, this guy must have good contacts with, finding land and finding places to develop. So I reached out to him. He was very positive in his response to me, and we became very close. He actually ended up wanting to invest in the company that I was building, and he he made a lot of introductions to me. So I learned a lot actually from Fujita. So this was, yeah, go ahead.
No, no, I don't want to. I mean, I could listen to your story all day. I do want to try and get to the subject at hand, which is AI, crowdsourcing, and of course your know, like, trust, invest.
Okay.
So
So let me accelerate to that. So
I
I
need to
left
do that.
Japan. I built the company. I had, I don't
Right.
know, 150 staff when I left. Replaced myself with another CEO. Moved back to the States. One thing led to another, and I did my own developments. And in '07, I sold out. I got lucky, and I sold out. So I was hired by a bank, East West Bank, to help them clean their balance sheet.
Well, let
In
me let me ask you this, because I'm
uh,
curious. What was it that tipped you off that 2007 was about to become 2008?
um, gut feel, frankly. The subprime mortgages were becoming a problem, and then the problem started to migrate into what were called Alt A's.
Hmm.
And I was trying to get bank debt for deals that I was doing ground up development, small lot subdivisions in LA, and there were I just was feeling strange vibes from the banks. I don't know. It was difficult to say. I was waking up in the middle of the night, really stressed actually,
Well,
and
they
so
were
I decided I need to get out. There's something wrong with the market.
underwriting. They were becoming less eager to lend.
No, they were moving. People were moving. They were still looking to lend, but people I was dealing with suddenly weren't there. Like they would leave. It was just odd. There was just strange things going on, and it made me uncomfortable. Plus, then there was this, there was definitely stuff going on in the mortgage markets, and it was starting to get noisy and uncomfortable,
Okay.
really. And so I
Better
just
lucky than
decided to
good, right?
sell. Hmm?
Better lucky than good.
Yeah, better lucky than good. So I sold, and that's how I got out.
That's great.
And then I ended up going over to Colony Capital. There's a couple of things in between, one thing in between, but I ended up at Colony Capital working on huge portfolios. I think we had $7-8 billion of portfolios, non-performing real estate collateralized loans, with the in partnership with the FDIC. And my job there was to manage some of these and work on divestments. So I met a lot of investors and sold some portfolios. At the bank, I had not done portfolio. I'd done deal. I only sold deal by deal. But at Colony, I packaged these deals into portfolios and actually sold them to banks. Yeah. And then that slowed down and the market started to improve. So now we're getting to the nub of your question. So I decided, okay, I'd had a really good run during the GFC. I'd done very well. And I decided to do something a bit different. I'd made some money and I thought, okay, now's an interesting time to do some seed and angel investing. So I started investing with these little startups out of an incubator at a university that I actually done some teaching at. And the language that they were using was the language of digital marketing. And it was a foreign language to me, SEO and CTRs and all these acronyms. But what I heard consistently across all of these startups was this language of digital marketing. So when the Jobs Act passed in 2012, which allowed for general solicitation, I realized that this is now the time. This is an opportunity now to apply all of these digital marketing techniques that have been, or tactics or systems that have been applied to basically every other industry, now could be applied to real estate. Capital formation for the first time, never been allowed. It was prohibited. So I started a podcast. I learned how to produce a podcast.
Maybe you can teach
And
me.
I built I did editing, all kinds of stuff. I mean, I really went to the nth degree.
Right.
I don't do half of what I did then because I figured out most of it was not necessary. I didn't need to edit audio
Right.
and try and adjust the tone of voice and all kinds of weird things that I was doing.
No question.
So I just went raw, so go raw. It was all audio in those days.
So back then, in the early stages of SEO, of Google AdWords, of all that stuff, so you were an early adapter, so you were kind of out there on the plane by yourself.
I was the only person. I figured out how to do a podcast. I figured out how to build a website, hook it up to automated emails. So I figured out a system. And what I found was happening was that I was getting a lot of inbound inquiries. A lot of my newsletter or my list was growing of people on, my email list. And I realized that I could actually apply this to capital formation. So I spoke to an old friend of mine who was or still is a sponsor, had about 300 million of AUM. And he said, yeah, we're going to go out, we're going to try and get some institutional capital. And I said to him, well, why? Why do you do that? Why not? Now the law allows you to do this. Instead of doing JVs, with private equity shops, why don't you raise money from individual investors? I said, I can build for you what I built for me. It's working really well. And he said to me, have you ever done this before for a sponsor? And I said, no. He said, all right, give it a shot. How much? He said. So I told him how much. He said, all right, give it a shot. So that's how it started. And I built a system for him. He's now got 1.6 billion of AUM. It's been very, very successful.
Let me ask you a question. At the time you said to him, why would you go to a private equity firm? Why would you go to an institutional investor? Why is going to the public better or easier than getting a lump sum from, some insurance company?
Individual, right. Okay. So this is actually one of the reasons that a lot of folk come to us. There are a few reasons for this. One is you have a lot more control, right? When you have a JV partner, inevitably, okay, so you've got a good pipeline of capital, right? You've got the capital, but they take a very substantial share of the equity. I'm sorry, in terms of the splits, that it's economically definitely favors the partner. But more importantly, you cede material decision rights. So you end up, and this is, I'm going to quote one of my clients who's an a Class A office sponsor with about fourth generation family office, about 4 million of capital. I'm sorry, 4 million square feet of office, Class A office, all doing extremely well, actually.
And what's the geographic breakdown of that? All over the country?
No, it's all in Florida. He's in Florida. And he described it. He says, I want to captain my own ship. I don't want to run my company by committee anymore. So anytime he had a major decision, he would have to call a meeting with the clients and with the investors, with the JV partners, with the institutions. And he had to get approval. So he didn't like that, number one. The other reason, and this is something that has emerged more so over the years, and one of the reasons that people come to us, is that when there is a downturn, when the market is unpredictable or there is doubt about what's going on, the future is unclear economically, institutional partners often pull out of the market. They consolidate positions. They stop investing, And it's at exactly those moments that you really want to be active. You want to be finding these distressed deals and going out, you want to be proactive. So sponsors are a lot more entrepreneurial than institutions. And so they move faster. So if you're ahead of the curve and you're finding these deals and you have institutional partners who have backed off, you can't do these deals that you want to do. So it's a separate sleeve of capital that you can tap into that allows you to do deals when the institutions have backed away. So that's another reason. In fact, some of our that's been a stated advantage from some of our clients.
I mean,
It's not a replacement. And Michael, let me just make the point. It's not a replacement. It's an alternative
right.
Capital source.
Well, there's no doubt that you want to be buying when everyone else is selling. You don't want to be selling when everyone else is selling. That's just not the best. But to your point, that's what institutions want to do. They panic, sort of. So now that there's a distressed market, how do you source the deals? You must have a broker or some kind of a network that just feeds you opportunities.
Well, so we don't source deals. Our clients do.
Okay.
So we are typically engaged, or historically we've been engaged to help raise capital. But what normally happens, right, I send out these proposals to our clients, or these contracts to our clients that describe everything that we do on the capital formation side. That's our core business. But what we find is that our clients often, as soon as we start, right, we've got an engagement, we've signed contracts, we've had a kind of initial payments is in place, and we start the engagement. Often what happens is they ask us for to get involved in other parts of the business. So they might say, look, we're trying to do acquisitions, we're having a hard time trying to find better deal flow. So we work on those as well. We don't charge anymore. It's just part of the service that we provide. So we build funnels for them, or marketing campaigns for them, so that they can find deals, off-market deals. So there's all kinds of ways that we do that to help them do it. What we're doing today, however, is we are integrating AI across every single aspect of the development of the real estate cycle, the deal cycle, right? The life cycle of a deal. And so we are working with clients to help them create pipelines of deals that are literally blowing away the kind of access that they've ever seen before. Not just access, but also the ability to screen deals at incredible volume, in depth, in a way that's never been done before. For example, I was talking to a sponsor yesterday who are helping to move from deep dive underwriting of 5 deals a week, because it takes a lot of time, right? You get into the data room, you got to pull all the data over into your spreadsheet, then you run the analysis, then you got to find the comps. It's a lot of work. So they're doing approximately 5 deals, underwriting 5 deals a week. So they look at hundreds, they underwrite 5 a week. With the systems that we're developing and that we're working on and introducing to clients, they're able to increase that from 5 to 50 a week in the same amount of time. So it's like hiring another 10 analysts to do this, but it's the same team that is running this kind of velocity now using AI.
Does obviously AI takes the data and ranks the opportunities, good, bad, indifferent?
Well, that is possible. At the simplest level, what we're doing is parsing data. So one of the biggest challenges or one of the biggest points of friction is, once you've screened hundreds of deals, right? No, this one's not multifamily, or let's call it a multifamily shop, right? It's not multifamily, or it's not in the right location, or it's not of the right vintage, or whatever your kind of basic screens are. You're left with a small group of deals that you want to dive into. So the next step is to open up the data room and move data from all of the PDFs and Excel spreadsheets and CSV files and images, whatever there is. You got to open up the data room, open up your spreadsheet, look for the numbers in the data room, search for those, take them from the data room and manually input them into your spreadsheet. So what we can do with AI now is automate that entire process. So you put both your spreadsheet and all the data room information in, and what AI will do is pass all of the numbers into your spreadsheet. Now the next step, right? So, and that happens in seconds. It's like almost instantaneous.
Yep.
So you're immediately saving between 3 or 4 hours of grunt work to do that. The second thing that happens once you've got that is you need to start looking at comps. It's no good just looking at the broker's comps that's trying to sell it or the seller's comps that's trying to sell it. They're always going to try and put that into, they're going to paint the best picture possible.
Of course.
So what we can also do is automate the acquisition of comps. So that pulls in from all kinds of data sources. So what you end up with is a spreadsheet that's fully populated with the deals data, and you get all the comps, and it's all interactive with maps and graphs and all kinds of stuff. Wow. And this all happens in minutes. It's almost instantaneous.
Amazing.
Yeah, it is.
Absolutely. So the know, like, trust. Can you just describe that a little bit?
Yeah, so that's now we're kind of moving away from acquisitions and other parts of the deal life cycle into capital formation. Right. So the way that it used to work, Michael, and you've been in this business long enough, so you know how it works. But the way that typically it works, or historically has worked, is that you would source leads from contacts, right? So you'd ask your financial advisor or your accountant or your lawyer. You join a country club, or you go and meet somebody, you get a referral, and you'd meet them. And in that initial meeting, you would answer their questions, or you would tell them about yourself, your background, your experience, your track record, and then you would field a bunch of questions.
Dog and pony show.
It's a dog and pony show, exactly. And you would have to do that in one at a time. Every single time you meet somebody for the first time, you've got to go through the same exact thing. Well, why? You don't need to do that now. With general solicitation, you don't have to have a pre-existing relationship with somebody. So you don't have to develop a relationship with them. Instead, what you can do is you can put all of those answers proactively onto your website. So you load your website up with essentially preemptively answering all the questions that somebody has. So what that allows your prospects to do now, as I pick up my phone as a prop, I should say, as a prop, is that you can, now what your prospects are doing is once they discover you or they hear your name, they're going to do research, right? Before they even call you, they're going to do research. Sure. So they're going to run your name or your company name typically in Google. I'm oversimplifying it. Nowadays, a lot of this happens in AI and some of the LLMs, but basically in Google. And the first two things that show up are going to be your website and your LinkedIn profile. So what you need to do is to optimize those. You need to have those answer preemptively every question that a prospect may have about you before they even ask. So, yeah.
And the way you determine what those questions might be is asking AI to generate a list.
No, you could do that, but the way to preempt that, the way that we do it, is that we probably spend between 10 and 12 hours with each client. Typically, the founder or CEO. It's usually the principals that only the principals that we deal with typically. And I interview them. I understand this business exceptionally well. I've been in this for a very long time. I've dealt with just about every asset class. I know how, having worked in distressed real estate as much as I have, I know how deals can go wrong. I know what drives deals. I know what drives, in real time, what drives investor decision making. And so what I do is interview the clients in a systematic way. Interview the principals in a systematic way over a period of, depending on how fast they want to get out, either 6 months or 90 days, 3 months sometimes. And I ask them about their background, and we have extended conversations, usually 45 minutes to an hour. And each time I'll identify, out of each conversation, I'll identify something else that they have said that I know will trigger investor interest and will be that will answer investor questions.
But at the same time, are you building your own? You're interviewing the sponsor,
Yeah.
correct? So did you know the sponsor before? Are you interviewing him about a current job and you already have a trust with that sponsor?
No,
The purpose is of the 16 hours together is for you to become comfortable.
not really. What I'm doing is I'm interviewing them
Right.
to as though I were an investor. So I ask them all the questions that an investor would want to know. From those conversations, we create content. So we create articles, we create videos, we create social media posts, and we put all of that information, all of those articles onto their website, highly technically. So we optimize for SEO, for GEO, for AEO. There's actually a lot of technical work that goes on in the background as well. We put all of that stuff on their website. We start pushing it out to social media. So now what, including particularly LinkedIn, by the way. So now what happens is somebody hears your name, a prospect hears your name, they see you on LinkedIn or they see you on a podcast or you go to a conference and you speak at a conference. The first thing they're going to do is research you. So they go to Google, they run your name, and now what pops up instead of a website that just has, a nice picture and a contact page, now what's on the website is your entire investment thesis broken down into key concepts and key terms or key ideas broken down, everything about your experience, how you learned the business, what lessons you learned, your view of the world, why you like the IRR, why you don't like the IRR, etc., etc., etc. So now what happens is that your prospects are able to use their phones or use their computers to learn who you are and to get a sense of they come to know you without any contact at all, right? They're without you having any direct contact with them. That's how they come to know you. And they come to like you and they come to trust you because what will happen is some prospects will look at your website, look at your LinkedIn profile, look at what you're posting, and some prospects will scan it and they will immediately think, okay, I can trust that this guy knows what he's doing, right? So they do it very quickly. Other people will read everything. They will watch every single video. And both of those audiences now become predisposed to investing with you. That's your invest days. They become predisposed to investing, and you've had no direct contact with them. Your website has done all the work. Your online presence has done all the heavy lifting of know, like, and trust.
So that's phenomenal. And what's the minimum investment that someone would typically make?
So our clients have raised probably over $1 billion in equity, and the minimums as low as 25,000. 25,000 is the minimum
So
typically.
let me ask you this. I tend to be a little bit of a skeptic. So,
Mhm.
you can basically you can create articles, you can create videos, you can create a biography of someone. Like, how does an investor, without kicking the tires, solely sight unseen through the information on a website, how does that, unless I'm atypical, being a New Yorker and being distrustful of people, but that will generate a level of trust that people will invest 50 grand.
Okay, Michael, you opened this podcast with an extremely flattering introduction. We have never met before. Never. You acquired that level of trust through my online presence. You went to my website. You've seen my podcast. You may have seen me quoted in the press. You've seen me on LinkedIn. You acquired that level of confidence that I was somebody worthy of having on your podcast to share with your listeners without us ever having any contact at all. It's
That's
the
true.
exact same principle.
And at the time I invited you on the podcast, I didn't even know you had a British accent. I mean, that's just
Really?
like
Well,
the,
you're not listening to my podcast then. You should tune into those. You'll
I
find out.
read, you know what? I read all your stuff LinkedIn.
Thank
It's
you.
great.
I really appreciate it. See,
Absolutely.
that's the point, though. That's how it works.
Right.
That's why it worked the very first time. When I first spoke to, I don't want to, disclose any names around. My first client, that's exactly what I said to him. I said, look, I built this system and people are coming to me. I've never even met them before and they already know me. I don't know how that happens. Blew me away at first. People knew me. Like you went through this whole bio thing about me. How the heck do you know that? It's because it's all online.
Right. Absolutely.
And so all I'm doing is taking that same process. By the way, there's nothing new about this. This is old. I've studied the genius marketers from over 100 years ago, like Claude Hopkins and what's his name? The Collier Letter Book. There's all kinds of marketing materials that were developed way before anything. They used to send out letters that solicited, sales, and they came up with they refined these techniques 100 years ago. The only thing that's changed, and it's no different, Michael, think about it, it's no different from the in-person process. The in-person process is the exact same thing. You educate somebody basically on what you are, what you do, how you see the world, right? What your background, your track record, your investment thesis, you do that in person.
Right.
All that tech does, all that the internet, the online world does, is it allows you to scale. So if you put that entire narrative onto your website, simply stated, it just allows everybody to come in and get to establish a relationship with you. We have clients, and this happens frequently, where our clients, I ran a deal, I'll give you one case study example.
Yeah.
We ran a deal, it was almost a $4 million raise, took us about 3 weeks to raise it for a client. And in that particular case, I ran investor relations. I didn't do any solicitation because I'm very sensitive to regulations, securities regulations. But I managed the relationship. It was mostly admin. So I ran the entire raise. All right. He did all the solicitation. I managed the raise. And after 3 weeks, I called him and I said, okay, I've shut the offering down because it's fully subscribed. So he said to me, who invested? Just think about that for a second. Who invested? The sponsor didn't know. So we pulled up a spreadsheet on a screenshot, pulled up a spreadsheet of all the investors with how much and etc. And he looked at that and here's the other thing that happens, by the way. It's actually an important observation, something I learned at that time. This was a few years ago we did this. He looked at the list and he said that I can't believe that guy invested. And I asked him why. Why? You're like, who is this guy? My first thought, I went cold first. I thought, oh my goodness, is this guy like a Russian oligarch or something that's on a do not serve list or something? I was a bit worried. He said, because I've known that guy all my life. I knew him at grade school. And he never even called me. Never even called me. And so it worked that way because we had set in place workflows that just made it so easy for prospects to come to know, like, and trust the sponsor, and more importantly, to go all the way through to investing. In other words, to signing docs and wiring money, that there was no need for direct contact. So what happens first when you build these systems is you activate your existing network. That's the first thing that happens. There are probably people, almost certainly there are people in your network who, it's hard to believe, but every time I say this to people, they nod knowingly, who don't actually know what you do. And they certainly don't know that they have the opportunity to invest with you. So they know you already. They're already predisposed to working with you. They just don't know that you can.
Right.
That they can. And so they do when you give them the opportunity, and they don't need to talk to you. They're busy. Also think about this as well. Accredited investors, which is our target market, they're all successful. They're all highly educated. 95% or more have degrees or advanced degrees, professional qualifications. They run successful businesses. They're busy people. They don't have the time to be pitched all the time.
Right.
They want to be able to do their research in their own time, using resources that they like to use, whether it's their phone or computer or LinkedIn or Facebook or go to the website, whatever it is, they want to do it in their own time. So make it as easy as possible for them to do that research. That's the kind of guiding principle.
It's phenomenal. You know what? I mean, our time is out. I want you to know I downloaded your geo optimized white paper, and fascinating points that I never really even thought about. And you're obviously a wealth of information. If somebody wanted to come and check out your website, where would they go?
Thank you for asking, Michael. So just go to gowercrowd.com, Gower crowd.com, and subscribe to my newsletter. There's a button there that says subscribe, and you'll get an email from me. And you can always just hit reply, and I'm at the other end of all those emails.
Phenomenal. You know what? We didn't get to everything that I wanted to talk about. I would love to have you back at some time and talk some more. You're fascinating. You know what?
Thank you.
You've achieved an unbelievable thing in a very crowded space. So I give you a lot of kudos, man.
Thank you, Michael. It's a real pleasure to be here. I'm really flattered that you would ask me. Thank you.
Pleasure is mine. And we'll see each other again.
Thank you.
Thanks for tuning in. See you next time. That's a wrap for this episode of Do You Ever Wonder? Thanks for listening. If you enjoyed the show, hit that subscribe button, share it with a friend, and drop us a review. We'll be back soon with more insights, experts, and conversations that make you think. See you next time. Do you ever wonder where curiosity meets conversation?
Thank you very much. That was great.
My pleasure.
You're a
Yeah, I'm
fascinating
delighted.
guy.
You're
Yeah.
very kind. It's a real pleasure meeting you. Are you going to come to did you sign up for the webinar, the AI webinar?
You know what? I think I'm going to be in Israel then,
Oh, okay.
but I'm not sure. If not, then I would love to come.
Yeah. Well, I'll send you I'll put it in the chat. I'll send you a replay. You
Okay.
should. It's
Terrific.
really.
All right.
I mean, there have seldom been times in my life when I've put these things together that I've had as high a level of confidence that it will blow people away
That's,
than
you know
this.
what?
Yeah.
What you do is very important for most people to
Thank you.
learn more about. So I will definitely join.
And I'll send you a replay even if you're unable to show up. How
Terrific.
long will you be in Israel?
10 days.
And you're going for pleasure or
So I'm
business?
the board chair of a combat veteran charity. We work with vets suffering moral injury at risk of suicide.
Oh dear.
Suicide is a big portion of that is
Mm,
loss of faith. So these
mm.
guys are mostly non-Jewish, but
Oh,
Israel, there's no more. It's a year-long program, but the journey to Israel really sparks something inside of them. That
oh, you take people to Israel. Wow, that's really good thing to do. All right,
vets.
good for
And you
you.
know what? The
Yeah.
IDF soldiers suffer in the same way. And, they come to learn that they're not criminals. They're not
Mm,
sociopaths. They were doing a job.
mm.
And, some of the things they did and saw are beyond the scope of anything I can even imagine.
Well, let me tell you something. That goes so far beyond anything that I do.
I
It's really
don't know
kudos to
about
you for
that.
doing that.
I
Seriously.
don't know
Yeah,
about.
yeah.
Thank you.
No,
I
no, it's a good
appreciate that.
thing. I
I
admire that
appreciate
very
that.
much. Yeah,
But we
good for you.
will be in touch.
Have a safe trip. It's looking like Iran is heating up badly.
Yes, it
So
does.
there's I mean I'm looking at the news every day to just hear about when it started.
I think that
I
what's
mean
really
it's just
doing
moving in
is
that
that,
direction. I don't think
well,
there's any
he's
hope to avoid
playing
it.
the diplomatic game so that we don't just attack them. He's letting them fuck
Yeah,
up.
but it's also an election year, so he'll be a war president and whatever. It's going to
Yeah,
get
no,
messy this year.
the world is messy, but
Yeah. So be safe. You're doing a
thank
good
you,
job. Yeah.
thank you, and keep on keeping on. I'll talk to you
Yeah.
soon.
Nice to meet you, Michael.
You too.
Take care. All
Take
right.
care.
Bye.